The boss of Emirates Group has warned profits are under pressure from rising oil prices and increased competition in spite of doubling earnings in its latest numbers. The owner of the Middle East's largest airline saw pre-tax profits nearly double to 17 billion dirham, £350 million, thanks to better currency exchange rates against the dollar, as well as moves to cut costs and the number of less profitable routes. Demand from passengers for Emirates flights also grew at a greater pace than the number of additional seats added by the airline in the 6 months to September 30, helping group sales rise 6% to 49.4 billion dirham. But Chairman and Chief Executive Sheikh Ahmed bin Saeed Al Maktoum warned the company still faced pressures on earnings in spite of the strong performance. Our margins continue to face strong downward pressure from increased competition, oil prices have risen, and we still face weak economic and uncertain political realities in many parts of the world, Sheikh Ahmed said. The Brent crude oil price hit a 2-year high of more than $64 a barrel earlier this month, and the likelihood is of upward pressure on this. OPEC this week predicted demand for its oil would rise in 2018. At the same time, its deal with members to cut output would reduce the amount of the fuel in storage, therefore potentially pushing up prices. Sheikh Ahmed added factors such as more fuel-efficient aircraft would help it control day-to-day expenditure in the coming years, but added the company would continue to keep a careful eye on costs while investing to grow our business. Emirates announced on Sunday it would be buying 4,787-10 airplanes from Boeing, although these will not enter into service until 2022. The carrier has more than 200 planes on order from Boeing, although its latest purchase did not include any more A380s, the supersized plane whose popularity is struggling to take off. Elsewhere, the group's ground handling and flight catering business Dnata also saw a 7% increase in revenue to 63 billion dirham, in part due to its presence in 84 countries. Its international operations outside the United Arab Emirates now account for more than 2/3 of the division's revenue.